how's it going?
There I am.
Let's start with the.
How does it? I was going to just throw out a question here, and sorry to interrupt, but how does it look to you? Does it look like money's exiting, or look it's rolling over a bit, doesn't it? Or are you looking at it from a fundamental?
Okay, so first of all, I'm glad you didn't ask me about my headset. I need to invest in some sort of audio equipment, but no, I'm not a video game player. Yeah, the market to me in Canada looks a little toppy. I've been saying that for a while. I think at the same time, the United States is just starting to see a lot of interest out of Canada. So much money's been made over the last few years in Canada, and I don't think that people are necessarily going to sell their Canadian holdings to buy U.S., but at the margin, I think there's a lot of interest. And I saw today GMP Richardson put out a report talking about the opportunity in the United States looking a lot better than Canada. This is something I've been hearing a lot, and probably more importantly than just that whole dynamic. I think if you just step back and look what's going on in the United States, things really changed back in April when there was just a whiff of optimism after a lot of pessimism, and that was with the Trump-Gardner kind of agreement. And we don't even know if it's going to play out, but there's optimism over that. And so we're seeing all these deals get funded out of Canada in the United States now. So it's clearly, I think that's an important dynamic for people in Canada to understand that the interest may be shifting south of the border.
What's the market cap of those U.S. listed companies? It's got to be a lot less than the Canadian side, right?
So apples for apples, and it's never exactly the same. So Macintosh apples for Gala or something. It's a lot cheaper in the United States, and it should be, because in the United States, it's federally illegal still. That's one thing. Number two, we have this thing called 280E. And number three, you can't do interstate commerce. And I guess in Canada, you can't really either, apparently, but that's another story. So it should be cheaper in the United States. And I've been saying for a while, it's just way too much cheaper. So to answer your question, I think this is the way to look at it. There are a lot of mom and pop operators out there, and we're just now starting to see the emergence of companies like Acreage Holdings, which I think was on the show in the last couple of days. The ones that have been around for a year have really proven themselves and have made a lot of progress. We're talking about like MPX Bioceuticals and Ianthus and Liberty, Canna Royalty. By the way, some of these are my clients. I'm not trying to show favoritism, and then a bunch of other ones that are starting to prove themselves. But now we're seeing new names. We saw GTI do just exceptionally well. I know Medmen probably wasn't perceived as being a good IPO. It wasn't a true IPO in any event, but the market cap is phenomenal there. And so clearly people are interested. And I think what's interesting to me, somebody who's been watching the market for over 5 years now, if you go back to 2014, there was this huge stigma, and it wasn't about cannabis or marijuana. It was about the OTC. And so I think what happened was the market crashed in 2014 in the United States, and nobody cared about Canada then either. It really wasn't until Justin Trudeau got elected in 2015. And the U.S. market has really been shunned, the OTC market for the most part. And what we've seen happen the last few years has been confidence in the U.S. companies that are listing in Canada. They've proven themselves. Again, we're talking about like Canna Royalty, Ianthus, MPX, and people have made money. They've seen that these companies can raise capital much better than they can on the OTC, and they get research coverage and better liquidity, all these things. And so here we are in 2018. Cory Gardner, the senator who cut this deal with Donald Trump, told everybody it's safe to come swimming, and the pool's very warm and sunny, and we're seeing a lot of deals get done now, and it's just unbelievable to me. I'm so excited, actually.
Hey, Alan, did you watch the Tilray IPO at all?
What? What's Tilray? No, I'm just
Tilray.
Kidding. Yeah, I'm just joking. Of course. So, look, that's another sign, obviously, and it's not really supportive of what I was just talking about. It's the exact opposite, and it actually was very interesting because that's the first time a Canadian company has basically given the middle finger to the Canadian exchanges and gone to the United States. And obviously, that's a one-of-a-kind thing. You're not going to see that happen again because Tilray is one of the big producers in Canada. There aren't any others that aren't public. So you're not going to see that. What you'll see is Aurora and Afria get an additional listing in the United States. They're not going to say goodbye to Canada. But so that was rather interesting. And I think even though it's the exact opposite of what we were just talking about, the U.S. companies going to Canada to get money, which is what's going on, that tells you the same thing, that the investment appetite in the United States is picking up. And it's obvious because that deal, it was upsized, so we don't know on that last 1.35 million shares how many of those ended up in the hands of Canadians, but we know about 25% of the original deal only, which means 75% of the Tilray deal was bought on the NASDAQ. It could have been Canadians, but it was bought on the NASDAQ, not through the Canadian broker. So I assume that was U.S. demand. And so I think it's pretty awesome. I think it's pretty crazy where that stock's trading right this minute. Not as crazy as yesterday, but still pretty crazy.
Right. Do you think that some of these U.S. valuations, like if you look at Medmen's comes to market with a $2.2 billion valuation, and Tilray comes to market with a $3.3 billion valuation, and Kush Bottles and all these guys have these big beefy valuations. Do you think that's an indication that U.S. investors would prefer to invest in U.S. operations over Canadian ones?
I don't know. There's a home court advantage, clearly, and it took a long time for U.S. investors to warm up to investing in Canadian LPs in general. I watched this for years. I have a lot of subscribers, and they were very reluctant to buy even the OTC tickers. This is just the way it works all the time, almost. People prefer to invest in their own country. So I think these large market caps are great. It's not necessarily great for the people who buy them at the top, but it's great because it shows you that there's a shortage of good companies in the United States. I mean, I guess you could say the same thing about Canada. The market caps are high. It just shows there's a lot of optimism, and I think that gives a chance for other companies to go public. I mean, in Canada, we've seen, 9 in the last 6 or 7 weeks go public. LPs we're talking about, and so I think Canada's pretty much done in terms of how many big stocks there will be in the future. Most of them are probably already public, and they might not be big right now, but they're already public. It's going to get harder and harder. That people don't have the attention span to look at public company number 42 through 50. But in the United States, and I think this is kind of the point GMP Richardson was making, there aren't that many public companies yet. When you consider that the United States is like 9 times, 10 times bigger than Canada, and the industry, it's a lot bigger, and there just aren't that many public companies. And the number of companies in Canada with a market cap in excess of $1 billion US is probably like 5 or something like that, 6. And in the United States, I think there's just 2. So, we'll see what happens, but I think we'll see a lot more of these companies going public. James, didn't you have Acreage on yesterday or recently?
We had Acreage on. What was that? It was about a week ago or so, I guess. And he was on, and they're not gone public yet, but they're going to soon.
Well, they said they are in the fall. They gave a date yesterday, not a date, but an estimate of the fall, which is that tells us something this year. And things always get pushed a little bit, but. What was interesting, they had a press conference yesterday, and I'm not sure how many people were on it, but I was glad I got a chance to participate. And they talked about their acquisition strategy and the needs for capital. And so, Acreage is one of several companies. And some of them, I bet nobody's listening right now has even heard of these companies. They're kind of quiet, just operating quietly. And so the people that have invested in them know, but the general public doesn't know about some of these companies. Or not that much. They're not really, in the limelight at all. They're going public. They can't say no. The valuations they see are very high when they look at GTI. And these companies are all in a land grab right now. They want to be able to go into the new states. And, when people sell, they want to sell into something that's really big. And the reason I brought Acreage up, because they had an issue, I believe, early on that they were just buying pieces of companies and not control. And I think Ianthus had this to a lesser degree. And one of the things Ianthus did was they went to 100% ownership of everything, and even in Massachusetts. And I think investors really like that. And so I asked Acreage, because they don't have any documents out there in the public, and they said that the only one that they don't control is Florida. I think they're in a dozen states with 2 more on the way. And so so one of the things they said was that they're going to the people that invested in a certain state's operations, where maybe they had the majority, but they're trying to get 100%. And they're basically, the story is, take our stock, we're going public, and you'll be more diversified. It's a pretty simple story. And these platforms that are emerging, and there's already several that are publicly trading. We've talked about Medmen, we've talked about GTI recently, and some others. I think this is a great time to start studying these companies. It's like Canada all over again, going back really to 2014 or 15.
Mm-hmm. What I mean, there's a whole bunch of people on our Facebook and YouTube pages now, and the questions that we see most frequently, especially in the current environment where there's all this blood on the streets, so to speak, is where is all this weakness coming from? What does it mean? And
the weakness in Canada, or what are we talking about?
The weakness generally in all cannabis stocks, in the sector generally.
Yeah, I think it's been more pronounced in Canada, and I think one of the things that happened there was the delay, and it wasn't that big of a delay, but it was a delay on top of another delay. So basically, if you go back, people were thinking it would be legal in April. If you go back to last year, and it got delayed, and then it was supposed to be, August or September. Now it's October. I think there are a lot of traders in the space, and time is money. So it's like, take the summer off, come back after Labor Day. Whereas before, if it was going to go live on Labor Day, there was a shorter time. So I think that's a small thing. I think I mentioned earlier that we've seen, I think 9 new public companies, and that's a little bit, dilution in terms of the number of companies out there. If somebody wants to buy a new company, they may have to sell one of their existing holdings. And then we've seen the big IPO, Tilray. That money came from somewhere. But I think there's another point. I mean, I saw some the tea leaves I was reading were basically that the LPs thought their stocks were expensive. I mean, Canopy did that huge convertible note, $48 conversion price. If they were that bullish, they wouldn't have done that. But a bigger one was Afria, that like the eve of the Senate, in what was maybe the most historic moment ever for the cannabis industry. I love those guys at Afria. I know Vic's on your show all the time, but what a terrible signal to have the largest equity offering ever on that day. It was. I think that there's just been a lot of signs that the market needs to cool off a little bit.
Are there
I have one more thing. I'm sorry, just to add, I think there's something actually even more important. I think people have come to the realization that legalization in Canada kind of sucks, quite frankly. I'm not criticizing, but it really does. I mean, I'm going to be in Canada. I could be arrested. This is in August, so it's not going to be legal yet. But what sucks about it is most people like vape pens, and you can't use vape pens for at least a year. A lot of people like edibles. You can't do that. Ontario, a huge province, 25 stores at first for the whole province. It's sad, but it's probably smart to start slow, start low and go slow, whatever they say for edibles. And so I'm not trying to be super critical, but I think the issue is I think people are starting to understand that it's not so great to have the government being the sole buyer like it is in Ontario, and hopefully that'll change. And it's just not as good as it sounded, I would say. But it's going to be good. It's just not so good from day one.
Yeah, well, interesting. Certainly, I can speak for almost all Ontarians, and I think almost all Canadians when I say nobody here is happy about the government being our dealer. And when you compare exactly. the range of products and the way in which you can access the products, and for example, I just came back from a week in California. I went to multiple dispensaries. We tried marijuana delivered to our hotel. We went and visited extracts labs. We tried, I mean, I didn't try, but we were offered to try shatter.
You observed.
Yeah, but they've got, every single product imaginable is fair game in California. And you can get it almost anywhere. It's like, it's so different from where Canada is today. And if you look at the way liquor is sold in Canada and beer is sold, if you want beer in Canada, you got to go to or in Ontario anyways, you got to go to a beer store. And if you want
or a grocery store now.
what, we've got beer in grocery stores?
Yes.
This is news to me.
Well, you don't drink beer.
I sure do.
Well, grocery stores carry beer.
I had no idea.
You got to be kidding.
I'm not kidding.
You got to get out of the meat section.
Apparently, I've got to get out of the beer store. That's what I got to do. Yep. Anyways, that's interesting.
It'll get better, James.
Beer and wine. Beer and wine.
Yeah, you get my point, though. We're so used to the government being the sellers of our stuff, and our rules have always been way more uptight than those of the U.S. It was only recently that beer gardens actually allowed beer to be sold on an unrestricted basis, but it's always been a feature of Canadian sort of, let's call it recreational substance use, that the government is, is like the daddy standing there saying what you can and can't do.
Right. So I think people are just starting to realize that there's going to be glitches between maybe not enough supply. I didn't mention that, but that's something I've been talking about for a while. That the delay is good for that. There'll be more supply, but it's still very undersupplied, most likely at first. If you look at how much money is being lost by these operators, it's clear nobody's hit scale yet. Nobody's making any money on cannabis except by selling shares so far. And if you look at the inventories, they're just not that great. And so I guess the good news is there aren't that many stores anyway. So it's just going to be a slow ramp at first. And, that's the way the medical was. It was very slow to start. And then the doctors started to catch on, and the medical program took off. And it'll be the same way. It's going to be great. So I'm not trying to be negative forever on it. But I don't think people understood this point, that day one is not as exciting as some might anticipate.
So, question that, and I don't know the answer to this, that's why I'm asking the question. What percentage of the Canadian marijuana companies are owned by U.S. investors? Is there a number out there? For instance, if you're an American and you sort of think, well, I can go into Canada through my broker and buy some shares. So would you say it's 20%, or there's got to be some U.S. money involved in this?
There is. I have not ever seen the data, so this is pure speculation. It's I don't know, 20 to 40% U.S. investors, which there's a lot more U.S. investors, but not that many of them involved. But so that's just an estimate. I've never seen. It's a great question. I've never seen that one studied by anybody.
Would they sell their Canadian holdings to buy more of the U.S. product, like U.S. issuers that are? Yep. Because I think that, they probably want to get around converting money, et cetera, right?
Yeah, I don't know. I think when I think about it, it's really more that there's a huge audience of investors in the United States that have never invested. And so a lot of them didn't understand the Canadian thing, didn't know how to buy into it maybe, and they missed out. So now they maybe have a second chance. So that's kind of what I think could fuel the interest in some of these U.S. names. I mean, what you're saying makes sense. There could be some of that too, where people that have made a lot of money in Canada, U.S. investors or Canadian investors that say, the U.S. looks like it's bottomed out, and this is the place to be. Maybe I don't know. I don't think it has to be that way, but there's probably some of that.
Like I don't know about how many, but the two that I've known, the GTI and the Tilray, they were spectacular. I mean, if you couldn't buy it you could have still made a lot of money in the first and second days, because they both doubled, right?
Right.
Yeah.
And we know the way things work. People are going to look at those and they're going to want in on the next one. So it's going to be a self-fulfilling prophecy, probably.
Yeah. So, Alan, you touched on this briefly a short bit ago, and you said, you asked the question, will U.S. investors sell their Canadian stocks to buy U.S. ones as America comes on strong? And I just want to flesh out that discussion a little bit more because, if you look at the valuations of Canada's unicorn cannabis stocks, of which there are now about 6, by any measure, you would have to say that they're, if not fully valued, they are definitely highly valued. And so one would immediately sort of lean towards the conclusion that there is more upside in stocks that have not been trading that long. And so especially in a market that is just sort of emerging from federal prohibition, or at least that's the sense we're getting, is that it's moving that way, and therefore the market is opening up more. And so I'm thinking, as that happens, might that be more the catalyst that drives more money out of the Canadian market and into the U.S. one, is when you can safely invest in the U.S. without risk of a federal prohibition somehow interfering with your investment experience?
Yep. So like I said, I gave some reasons earlier why there should be a disparity. Traders don't necessarily take the time to fully understand all the risks. And I'd remind everybody, the United States, much riskier. I think traders will look at the charts, let's just pick on Aphria a little bit. Their stock's way down from the highs, and it's pretty close to the recent lows. That's not the kind of thing that attracts traders. The kind of things that attracts traders, I think, is like GTI went up a lot. It's down a little bit on this capital raise, but it'll probably recover. And you start to see that. That's just trader talk. And you could see some of that, just pure technicals, that you can make some money in the U.S. Buying these names, and Canada looks, like it's rolled over. If you want to talk about the valuation, though, I'd remind everybody that Canada is federally legal. This means a lot. It means that you can do these clinical trials and go after the pharmaceutical market, which is huge. If you listen to Bruce Linton talk, and I know you do, James, he's been on your show, he's been on with Kramer, the pharmaceutical opportunity for displacement is just huge. And U.S. companies don't really have that, and Canadians do. And then there's also, just in general, the whole international market. U.S. companies are precluded from participating in most international markets. The only thing they can do is license their brands. They can't actually benefit in the building of businesses. They're like in Germany, they were cut out. If you had anything to do with the U.S. illegal company, you can't do that. So Canada does have these international opportunities. I would argue at a second level that it's expensive to pursue these international opportunities. It's not like it's free money. You have to, invest in building cultivation in Denmark or what have you. So it's not riskless, and it's not free. So I think, look, I can understand why people are going to do this. I'm not saying it's right or wrong. Some people will say, hey, I made all this money in Canada. Canada looks pretty tired here. I'm going to move into the United States, which has a lot of interest right now, and I'll come back to Canada right before legalization. I mean, that's I can see people coming up with that, but I think the bigger issue is for the United States companies is to get U.S. investors that have never bought a cannabis stock excited. And, people like to invest in companies that they know or trust. And, there are a lot of companies like Medmen. I think that's one of the reasons they've done well. They've built a big brand. When I say they've done well, their market cap is so high because people associate with, they see their Medmen store, they can go touch it and feel it, buy it, whatever they want to do. And I think there's going to be a lot more of this in the United States, where we get cannabis investment naive people who now get it. It's okay to invest in a Canadian company. You just have to learn how to do it, and it's okay. Look, you can go look at these charts. A year ago, these stocks were like Ianthus was at $1.70, and then it's at $7.50 Canadian. So that's what people like. They like to buy when things are going up.
Alan, let's talk a bit about, we've talked about Canopy always as sort of the bellwether in the Canadian market, as the largest, the first, etc. But tomorrow we're expecting Aurora to announce the conclusion of the takeover of MedReleaf, which will make Aurora the largest company by market cap in the world for
sales
in the cannabis space. And so I'm curious as to, yet their stock is selling off dramatically today.
Yep.
And I'm wondering, do you think that's because people are taking this last opportunity to sell MedReleaf at the premium that it's at before they're actually having to take the conversion on the Aurora shares? And secondly, this is a long-winded question, I apologize. Secondly, do you think that Aurora's new status as the largest company by market cap in the world will represent an inherent advantage to it in terms of attracting new investors that has formerly been occupied by Canopy as the largest company in the world?
Yeah, so first of all, I think for MedReleaf, this is a very valid concern. We saw this with Canamed. And Aurora stock did very poorly in the back half of March after Canamed. And this is not my area of expertise, but I can look back and see what happened there. You have a lot of people that will be able to sell stock that haven't been able to sell because they won't be restricted like they were before. The positions won't be so large relative to the float. It's a more liquid security. So we saw that after Canamed, the people that forced the deal, they weren't locked up, and I don't think, and the stock went down a lot. So I think the weakness today. So there is some of that, and I think the weakness today. It's not just that. I mean, it's not like just Aurora's going down. The whole market seems to be going down, and this has been going on for a few weeks. We had a nice little bounce, I guess, yesterday, but and maybe Friday as well. But it generally right now, I'm pretty cautious on Canada, not for any reason except that the charts don't look that great. And so, to your second question, I don't know why people have to do this either or, like, oh, Aurora's the best or Canopy's the best, right? Best. I hate both of them. I don't get that. So your question really is, do people have an alternative now that Aurora and MedReleaf and Canamed combined is now bigger than Canopy? I don't think that even matters. I mean, both those stocks have been highly liquid. Both those companies have raised capital immensely and at progressive levels. Both those companies check every single box that anybody could want from a company. Doesn't mean their valuations, right? But they're multiple platforms, they're global, they have the extracts, they got it all. So doesn't mean they're the best investments, by the way. But so I don't really see this as being negative for Canopy, if that's where you're going with it.
Okay, great. All right. Well, Alan, that's been fantastic. We've taken 30 minutes of your time, more or less. We don't want to wear out our welcome with you. And as usual, I really appreciate your participation, and as does our audience. And we hope to come back to you often.
Great. Sounds good. Thank you. It's nice to meet you.
Thank you.
Thanks, Alan. Nice meeting you.